Good evening. Can everybody see the screen?
Yes.
Yes, I can see it.
Yes.
I did not receive word from Mr. Belts. I don't know, Patty, if you heard anything.
I have not heard anything from Mr. Belts.
Okay. Well, this time, if we could all rise for the Pledge of Allegiance. I pledge allegiance
Allegiance to the flag
of the
of the
United
United
States
States of America,
and to the
to the
republic
republic
for which it stands,
and
one
one
nation,
nation,
under
under
God,
God,
indivisible,
indivisible,
With
with liberty and justice
and justice for all.
to believe. Mr. Belts, I do see him on as a panelist. Okay, Patty, if you want
Okay,
to.
Megan, can you take the roll?
Yes. Richard Belts. I know he's present, but I don't think his mic is hooked up, so I'll mark him present. Rita Spinelli,
Here.
Nathan Fuller,
Present.
Patricia Denicola,
Present.
Tina Champ, Jonathan Kleber.
Present.
Okay, we'll start the meeting with the 2020-21 budget discussion. JJ, if you could bring up the PowerPoint presentation. And just for everyone in participation, this presentation will be shared on the district website tomorrow at its earliest convenience. And JJ, if you could advance to the next slide.
Are you able to see that?
Yes, I can see that slide. If you could advance to the next one. Down in the bottom left corner, there's like two arrows. Yeah. Okay. Before we, get into the meeting, I just want to put a couple thoughts in people's heads. We've had a lot of discussion over the last year about historically where the district's been, looking forward, where's the district going? And I think it's important that we learn from the past, but we develop plans to move forward. So I just threw two quotes out there that I'm going to read, and you can think about them or not. I just think it might help us focus on where we need to get to. Don't dwell on what went wrong. Instead, focus on what to do next. Spend your energies on moving forward toward finding the answer. The other quote is a little more direct. While we cannot forget the past, we can't live in the past. We have to learn from the past and move forward. Losers live in the past, winners learn from the past and enjoy working in the present toward the future. I think, the Hayton Area School District is, we have some challenges ahead of us, but we have a very bright future if we can all work together and solve the issues that are in front of us. JJ, can you go to the next slide? This is just a simple statement, overview of where we've been, where I think we're going. Over the last few years, the district's expenditures have surpassed budgeted amounts. The district has also completely exhausted its fund balance. Beginning with the 2019-20 budget, the district did, however, take steps to appropriately budget actual expected revenues and expenditures. Moving forward, the district must cut costs in order to balance the 2020-21 budget and continue to create balanced budgets in order to regain and maintain financial stability. The next slide. There's a number of upcoming finance committee meetings. So I wanted to just give an overview of the upcoming meetings. We have tonight's meeting, June 15th. We also have another meeting planned June 22nd. Prior to the board meeting, the finance committee meeting will occur at 6 p.m. At 7 p.m. will be the regular school board meeting on June 22nd. And then on June 29th, there will be a special board meeting to adopt the 2020-21 general fund budget, and that also will be a virtual meeting at 7 p.m. I want to give an overview of who it is we're serving and how we meet the needs of the individual students that we're serving. Kind of give an overview of where the district has been as far as total number of students, lead into, total number of employees, and then where our local revenue has come from over the years. So the district, as everyone knows, serves the students of Franklin, Mahoning, and East Penn Townships, as well as Lehighton, Borough, Parrville, and Westport. JJ, next slide. You will see that in 2016-17, we had 2,577 students. That was our high since 2009-10, and right now we have 2,362 students. So from 2017-18 through the current year, we've been hovering around the 2,400 mark. So that's the number of students that we're currently serving. Next slide. Our total employees, over 65% of our budget is based upon employee costs. That includes salaries, related personnel benefits, and mandated costs such as PSERS retirement and federal employment taxes. This is a standard percentage of any school district in Pennsylvania's budget. So generally speaking, this over 65% of the budget is in personnel costs. That's a pretty standard measure across the state. Next slide. So again, I presented our total employees from 2013-14 to 2019-20. We had a high of 344 employees in 2013-14, and in 2019-20, we have 310 employees, and you can see the breakdown there. And keep in mind, again, this presentation will be posted on the website. Next slide. So then I just graphically am showing the total employees by group. In 2013-14, we had 194 professional staff or teachers, and we're down to 174 in 2019-20. In 2014-15 and 2015-16, we had a high of 23 administrators, and we now have 17 administrators. We've also seen a decrease in the number of our support staff. We had a high in 2018 of 130, and for 2019-20, we have 119. Next slide. Total employees by group, again, it just is showing what the graph showed, the numerical table that supports that graph. So again, we went from a high of 344 down to currently 310 employees. Next slide. We've also had a change in the percentage of full-time versus part-time employees. In 2013-14, we had 310 full-time employees, 34 part-time employees. We now have 267 full-time employees and 43 part-time employees. That kind of shows you the change in full-time versus part-time. And again, there's the numerical information to support the graph of the full-time versus part-time employees. That kind of gives you an idea of how we serve the roughly 2,400 students that we have. We have 310 employees. Those are the, the supports we have to support the students of our community. Next page. I'm going to delve into the local real estate tax revenue. Over 53% of the district's revenue comes from local sources, such as real estate and other tax revenues. We can go to the next slide. I'll talk a little bit about the real estate tax history of the district. So since 2009-10 through 2019-20, we've had some increases in the tax rate, 2009-10 through 2011-12. Then it remained flat for 2 years. Then there was a small increase in 2014-15. Then for 2015-16 through 2018-19, the real estate millage rate remained at 47.88 with no increase. In 2019-20, there was a 1 mil increase to 48.88 millage rate. Next slide. I did a comparison of the Carbon County school districts just to give everybody an idea of if a home has an assessment value of $40,000 in each school district, what that school real estate tax bill would look like. In Jim Thorpe, and this is based on the 2019-20 tax rates, a $40,000 assessment would give a real estate tax bill of $1,820.80. In Weatherly, it would be $1,953.60. Lehighton would be $1,955.20. Palmerton, $2,311.16, and $2,587.60 in Panther Valley. I think it's important when you're looking at the school districts to understand that a district like Jim Thorpe has much more of a large commercial location that they can tax, and that they have a number of ski resorts and commercial entities. So more, they have the ability to tax more commercial entities and may not necessarily have to tax as high than their residents. The remaining districts, including ourselves, Weatherly, Lehighton, Palmerton, and Panther Valley, we don't have that large commercial presence. We have small retailers. So unfortunately, when we increase taxes, we're increasing at, our millage rate is higher than Jim Thorpe because we don't have that commercial entity to generate the revenue off of. The next slide. I also don't think you can talk about taxes without talking about, the number of taxes that go delinquent. Unfortunately, somebody's personal economic conditions can change, and this can affect the property owner's ability to pay the real estate taxes and other expenses. Next slide. From the tax levy years, July 1st, 2014 through July 1st, 2019, I've shown what the district has levied in taxes, and then what ultimately went delinquent, what property taxes remained unpaid that went to collections. That doesn't mean people lost their home. It means it was turned over for collections in accordance with the law requirements, turned over, and then in most instances, the collection agent is able to work out agreements with the individual property owners to develop a payment plan whereby they can pay their taxes without losing their home. You can see that in the 2014 year, we levied $17.5 million in taxes and turned over $1.4 million. Whereas in 2019, we're levying $17.8 million and we only turned over $929,000. So over the years, we've turned over less and less. That means our community has continued to be able to support the district's needs as it relates to real estate taxes. The next slide. Just from a number of parcels standpoint, the percentage of delinquent parcels has decreased from a high of 797, which was 8% of all parcels in 2014, down to 576 in 2019, which is 5.2% of all parcels. We don't want to see anybody turned over to collections as it relates to real estate taxes, but unfortunately, sometimes that happens. I will say though that the collection agent, they do strive to work with individual property owners to establish payment schedules, so people remain in their homes and they can get back on track if they've experienced an economic hardship. So this is just the breakout to support the former graphs, and it again shows you the tax levy dates from 2014 through 2019, the amount that was levied versus the amount that ultimately at the end of December was turned over as delinquent. You can see that the percentage of parcels placed went from 8% down to 5.2%, and the number dropped from a high of 797 to a current low of 576. So those are all the pieces that go into forming our budget. What are our personnel costs? How many students are we serving? What are our student needs? And where is our revenue coming from? We touched on in the last finance committee meeting the state and federal revenue sources. Now we have the local revenue sources. You kind of have a history of where the district has been. Now I'm going to touch a little bit on historically what budgets versus actual expenditures have been and get into our current budget situation. So on May 27th, we passed the proposed budget. It had revenue of $40,090,465 and expenditures of $43,043,444. That's a budget deficit, meaning our expenditures outweighed our revenues by $2,952,979. At the prior finance committee meeting on June 8th, we had some firm numbers as far as the state budget, what we could expect in some federal monies, and also knew that we had some retirements and positions that we were able to arrange our schedules so that we don't need to fill those positions. So as of June 8th, our revenue increased to $40,566,892, whereas our expenditures dropped to $42,513,563. This still leaves us with a budget deficit of $1,946,671. That's the problem we need to solve for the 2021 budget. Just an analysis of the historical budgeted adoption versus the actual expenditures. You will see that in 2014-15, there were budgeted expenditures of just under $37,100,000. We spent just over $37,100,000. We overspent the budget by $68,975. In 2015-16, a budget was adopted in the amount of $38,658,581. However, actual expenditures were over $44 million. So the budget was overspent by $5,351,506. 2016-17, there was a budget of $39,278,728. What was actually spent was $41,478,220, an overspend of $2,199,492. In 2017-18, the budget was $40,999,866, whereas actual expenditures was $42,905,729, overspent by $1,905,863. Budgeted expenditures for 18-19 were $40,694,460. Actual expenditures were $43,901,735. That's over $3.2 million overspent. The consistent overspending is how we're at the point we are today, having to look at how do we balance a budget against no fund balance. I can say that when you had ongoing expenditures of 37 million, 44 million, 41 million, 42 million, having budgets of less than $40 million, I don't know how that budget was tied into any realistic estimation of actual expenditures when you were historically spending upwards of $40 million, how budgets were presented that were less than that. It could be, a lot of things can happen, from a revenue standpoint and such, but this is expenditures. Our expenditures outpaced what we budgeted. If we go to the next slide, we'll show that in 2019-20, as I said at the beginning of the presentation, we attempted to create a budget that more closely estimated our actual expenditures and our actual revenues. That means that our budget went from 18-19, it was $40.694 million. We increased it to $43.891 million. But that was based upon what our actual expected costs are. That $43,891,000 budget for 19-20 is just under what our actual expenditures were for 2018-19, $43,901,000. So we, in my opinion, have aligned a budget that's based upon our actual expected expenditures and our actual expected revenues. That being said, the 2021 budget that is currently proposed of $42,513,563 is what I estimate to be our actual expected expenditures. Knowing that that's what the expected expenditures are, and that's expected expenditures with a lot of cuts in it. Over the last year, we have cut every possible expenditure that we could. If there was a free tool available from the state level, we eliminated purchasing something from a vendor and utilized the state tool. We have made tough decisions and cut supplies. We have gone out to bids to, cut our costs. I have to commend the entire administrative team, the entire business office team. We have taken the steps needed to try and get us in the best financial position we can. But when your budget is based 65% on salaries and benefits, things that are out of your control at this point, it's very hard to balance the budget without looking at programmatic cuts. The $42.5 million estimated expenditures is $1.9 million more than what we expect to take into revenue. Now, the next slide. So we did talk about some potential options to solving the deficit. There are some personnel adjustments that could be made. As we touched on last meeting, we could eliminate non-mandated costs of co-curricular activities and non-mandated transportation. We could entertain a real estate tax increase. I know these are a lot of numbers, a lot of things to like wrap our heads around. How did we get to this position? Why is it, what do we do to go from here? If you could go to the next slide. The next steps, as I said, is we have the June 22nd Finance Committee meeting. We need between that point and June 29th, spending decisions must be made in order to develop a balanced budget for 2020-21. As per school code, the total amount of such budget shall not exceed the amount of funds available to the school. That the only funds we have available, because we have no fund balance left, is our revenues. You can pass a budget and utilize fund balance to balance that budget, but you can only utilize that fund balance if it's available to you. Over the years, the district has exhausted its fund balance and now has no fund balance to rely upon. So that's why we're saying tonight, by June 29th, we need to pass the budget that is balanced, that has expenditures that match revenues. And then throughout the 2020-21 school year, if our revenue estimates fall short of expectations, they may fall short due to results of the pandemic that are not known at this time, or another quarantine that could negatively impact revenue sources. We need to be prepared that throughout the 2021 school year, there may have to be additional spending cut decisions, but at a minimum for our 2021 budget that we're proposing to be adopted on June 29th, it has to be balanced. We need to have the revenue to support the expenditures. And right now there's a shortfall of over $1.9 million. At the next meeting on June 22nd, we have some potential options to solving the deficit. We can present, a number of different options of cutting non-mandated costs, eliminating certain programs. We'll provide a couple different scenarios, and then the board will have time to evaluate them and look at the options of where do they see the balanced budget coming from. So that's a lot. I know I went through a lot of information and I gave a lot of history, a lot of stuff to digest, a lot of what might be eye-opening statements. We have had, many discussions throughout the past year of, yes, the budgets have been short of what we've actually expended. When you do that multiple years in a row, you end up in this position. Nobody wants to be in a position where we're talking about real estate tax hikes and programmatic cuts, but in order to comply with school code and just from a reasonable perspective, in order to be able to pay all of our bills as they become due, we need to make sure that we are committing ourselves to expenditures that will be supported by the revenues that we anticipate coming in. Are there any questions or comments from the panelists?
I have a comment. First of all, thank you very much, Ms. Denicola. I thought that was quite a concise and eye-opening, even though I know those things. It's nice that everybody else can get to see them. So thank you for that. My comment basically is this. We can say that you need to run a school district like a business, and to a certain extent you do, yes. But there's a big major difference here, and that is that our client and our source of income are not one and the same. Our clients are the kids, and our source of income is the taxpayers. That's unfortunate because you can't just go out and sell more or, change the way you're doing business. We have no choice with that. So I just want to comment on that yes, you can make a budget that any business can make, but that's not what's here. This is not any business. Thank you.
I also have a comment, Patty, if I could. On one of your slides a little ways back, you showed the incoming tax revenue year by year. I believe the heading was the delinquent real estate tax history.
Yep.
And it showed, so it shows here the levy from year to year. In some years has gone down, and basically 2018 still sat at the same point of 2014. So I think it's worth noting that as everything, nearly every other expense the district has goes up from year to year. The cost of our utilities, the cost of our staff, the cost of our insurance, our transportation, as does in anybody's normal household budget. And our incoming tax revenue has not kept pace with that. And of course, some of that is just because of, an assessment is set and generally fixed from year to year. But I did the math. If from 2014 we had seen even an average 2% annual increase, this year we would be looking at, I believe, a $19.7 million levy, which just would keep up with inflation. And even if we had that, this wouldn't even be a conversation. So it just goes to, I think it just illustrates to us how important it is for that number to move slowly as the expenses of the district can continue to move, and as just cost of goods in general.
Correct. As our total assessed values have not, increased, we're not gaining any additional revenue, even from just holding taxes flat. So all our expenses are rising, but when 53% of our revenue is actually coming from this source and we're seeing no growth in that source, it makes it very difficult to continue as is, which is again why we're at the position we are at right now. My goal is to get us through this financial instability and get us on solid footing, so we're never making these difficult decisions again. It will take time, it will take some hard work, and it will take a cohesive commitment of people to make the tough decisions and then find ways to get back what we might have eliminated.
I definitely agree. And I don't have any further comments. Just want to thank you for a clear presentation also here that does a good job of laying out not only how we got here, but what our current situation is.
Thank you.
Any other questions from the committee before we go to the attendees?
No more questions right now from me.
Just double,
Nor me.
okay, just want to double check to make sure you could still see the presentation in case we need to go back to reference any slides. Are you able still to see that?
Yes.
Okay. We do have a comment from Mr. Bradley. Mr. Bradley?
Yes, I'm here.
Yes.
Okay, so you guys have a moral dilemma. And I agree that you don't want to look too far in the past, except for to realize that the immorality was a function of overspending your revenue. Nobody can expect that to occur. So why doesn't this board, this moral, responsible board, give the administration, their subordinate administration, the direction to start the budget process from revenue, and let's try to remove first the 500 houses or homes that are delinquent. So why don't we start the revenue process with a tax reduction so that we don't lose any of those people, and then go to the next step, logical step, which would be the mandates that we're required to provide. And then, and only then, would you ever even think about considering to remove the safety of the students in the busing or the athletic programs that are so valuable to small communities? I think you guys have this backwards. I think the numbers are skewed and no one gets a chance to check them. And I think this board, Nathan, Rita, you guys are given the authority to this administration that benefits from the value of all that spending. It's obvious that this decade-long process of overspending is immoral. You need to fix it. You guys need to resign and let the board, with the ultimate authority to the decision as to preparing the budget, to allow that to take place. That's my opinion. Thank you.
Ms. Bose? Ms. Bose?
Okay, I had to wait for the unmute to come up. Basically, we are what would be considered a bedroom community because we don't have any real large business. I mean, we have some, but not much. And unfortunately, pay raises have not kept up with inflation, let alone paying taxes. I believe it was mentioned for a number of years now that you can't keep spending more than you take in, or we're going to end up here, and here we are. However, over the past few years, we have added programs. I don't know what your decisions are going to be. It's just sad that the kids are going to be the ones to suffer. And while the students that we serve are not the same people that pay the taxes, in a lot of cases it is, because their parents are the ones paying. And it is also unfortunate that we live in a community with a lot of low-income people. I do have a question on the LVHN and the St. Luke's presentation at the athletic meeting. I couldn't stay for the entire thing because I was late for work. How is that going to affect the budget? Because from what I did see, they were offering services upwards of $8-9 million to the district that we wouldn't have to pay. I did not see all of the St. Luke's presentation. Can we at least get the slide presentations up on the website so people can see it? But how is that going to affect the budget, whatever decision is made? Or the finances of the district? How will that?
Barb, if I can just jump in, both of those proposals, and JJ, correct me if I'm wrong, will be placed on the June 22nd board meeting agenda to be voted upon. So the board will make the decision as to which avenue they wish to take, and then we will immediately work those numbers into the proposed budget. A lot of the services, so obviously the athletic training costs that are currently in this budget, they would come out based upon those proposals. Some of the services that they are providing are enhancements. They're not necessarily taking away from our current expenditures. So they will enhance the services we're able to provide to our students. However, they're not going to enable us to eliminate any current costs. But I do think both of those proposals, either one of them, will supply significant enhancements for our students with no cost to the district. But we would be able to back out the athletic training cost.
Well, like I said, I saw the LVHN presentation, and they were talking about giving money back to us for this year. And like I said, I have not seen the St. Luke's, so I don't know, because I mean, LVHN is our current vendor. And I know there was a $75,000 cash payment each year as well. I don't know what St. Luke's offered.
We can work to get both of those up on the
Yep.
on the website.
And they,
I think that would be beneficial.
yep, and we could also share both those, but just as far as like the renewal and the unsigning, I could say that under the proposal from Lehigh Valley, they had a renewal of $75,000 for upon renewing, and then St. Luke's had 100,000 upon signing, and then it goes out too for additional partnerships in different areas. But we could definitely get them on for.
I think it would be beneficial for the community to see that longer, the longer the better.
Yeah. Yeah, the board, we did forward everything. The board does have them already. We did send them to them, but we could get them posted as well.
Okay, that would be helpful. Because I think that is a possibility of changing the deficit number. I guess that's it for now, but can I please, if I raise my hand again after someone else's comment, if I have a comment on that, if possible, I'd like to be able to make that comment.
Thank you. We do have Mr. Kemmer. Mr. Kemmer?
Thank you very much. My question is for Ms. Nicola. Have we ever explored potential savings as far as our food service is concerned? And how does our food service impact the budget? And for how many years are we tied into the food service we're in presently?
So we follow PDE requirements as it relates to our food service management company. We were required to go out to bid for the 1920 school year. And then there's a multi-year renewal that is part of PDE. So we went out to bid last year. The current provider had the most competitive proposal. They were also the former provider. There is $110,000 within the general fund budget that goes towards supporting the food service program. Obviously, the pandemic has put a wrinkle in all food service programs. We did what we could to get the most food into the most students' hands. And again, I want to thank Leon George and his company for supporting our efforts in getting food into the hand of students. Historically, the food service fund has operated at a loss, and we're trying to take steps to turn that around, but also not turn that around, but also to get more meals into students' hands. Our department that handles our free and reduced applications does a tremendous job of helping families get their approval for either free or reduced lunch so they can eat every day in our cafeteria. We are working with the food service management company for potential options of getting more breakfast into the hands of students. So we're constantly looking at ways to generate more revenue, to have our food service program operate at least at a break even, but also to balance that with actually our main goal in that program is getting more food into the students' hands that needs it. But within the general fund budget, there is $110,000 that goes to support the food service budget.
So in respect to that, did you say we are contracted for multiple years to come?
Correct. We're in the second year of the 3-year contract. The 2021 year will be our second year.
Okay. My main thought was that is, I know other districts across the United States explore different avenues of getting food to their children. And my other question is, do every student is considered each day potentially having to buy food? Is that how that works? So they make the food for potentially every single student every single day?
No, they make the food for their projected number of sales. When they do this for multiple years, they get a really good idea of what the students are going to buy. Like if it's a chicken nugget kind of day, like they might get a ton more orders, so they prepare for that. They know they know what the kids like, so they plan for that. They also maintain the food quality standards, so there's very little waste.
So in lieu to that, if there was a potential way to even, not that you want to, but get more people children out of that projection potentially, that in essence could in the future present some savings. There are school districts, like I said, that do multiple things like provide food trucks to the students. I work over in New Jersey. I see the most affluent school districts with 3-4 food trucks, which all those kids are essentially out of the food program budget, you know, where they're just figuring out another way to eat. And as long as those trucks are on par with the health standards that, you know, we want our kids to go by, through vetting, it would ultimately reduce the amount of students that we would be projecting. In the future, if there's a potential to explore that, I think that it would create some savings, you know, and I think that in this situation, every bit counts.
Every bit will help, and we definitely look at lots of creative ways to, you know, get the proper nutrition to our students and also maintain, you know, compliance with the National School Lunch Program and all of the guidelines that go along with that. So, and we will continue to look at options and continue to do that.
I appreciate it. Thank you. And a comment.
Thank you.
Ms. Bowman? Hello, Ms. Bowman?
I'm here. Good evening. Can you hear me?
Yes.
Okay, thank you. Patty, thank you for that presentation. You did a nice job putting it all together in historical context. And I just want to address Fred 1 minute, because I think you did touch upon this, Patty. I believe we do get reimbursement for breakfast and so on and so forth from the federal government. And I think that's what you're alluding to. Am I right, Patty, with making sure we're always following the guidelines within the...
Yeah, there's not only guidelines for claiming the lunches to get the reimbursement, there's also nutritional guidelines, very strict nutritional guidelines that must be met. So we monitor both of those.
Okay, thank you. And I agree with Nathan and Rita. Of course, our client is our students, and I know we're always looking ways to produce revenue. But I do know back in the early 2014 and 15, I remember that auditors were always telling us to make sure that our fund balance was within the state guidelines, and that percentage is 8%. So that was one of the reasons why fund balance had been used, as well as hoping that we were getting the delinquent taxes as well as insurance claims. So, and I agree with Nathan, you know, hindsight is always better. You know, maybe a smaller tax increase would have helped offset some of what the fiscal year and levy looks like. My next question, with cutting personnel, I'm concerned about the number of students in our classrooms. And I believe, did you show the slide for the incoming kindergarten class, Patty? Was it 163 kids so far?
That's all this year's numbers.
Current,
Oh, okay.
Yep.
So we don't have new data.
No, we're projecting about 160.
Okay, so around this, close to the same number. Okay, so with any personnel cutbacks, how will that affect our class sizes? Because, you know, people in the community would like to maintain what we've had in the past. And I know this may be a tough year, and with how things are going to look coming out for the kids and so on, maybe it's an adjustment year, but I was wondering what kind of look that might look like.
Gloria, we're constantly looking at ways to maintain an equitable, you know, education for all of our students. And that goes into class size, it goes into everything. But when you have limited resources, you have to, you can't always have what you want. You have to have what you can afford. It pains us, some of these discussions we have to have. We're constantly looking at ways, how can we better serve our students with the limited resources we have? That's in the forefront of our minds, and we have to balance that against, you know, the state guidelines and our cash flow, our ability to pay our bills. So we balance all of those things. We don't take any of these decisions lightly. And we are hoping that we can, again, get to a financial stability point that we, you know, in an ideal world, over the next 2 years, we get to a situation that we have got ourselves out of the position we are in today. that is the ultimate goal. The ultimate goal is to, let's move the district forward. Let's learn from our past. Let's not make the same past mistakes, and let's make, the appropriate decisions going forward so we never have to end back up at this point.
Okay, I appreciate that. On a positive note, there are some new homes going up, and acreage has just been sold. So that's a good thing for Lehighton, FYI. So I appreciate that. Thank you.
At this point, requests to talk have been met. Anything else from the panelists?
No, I just want to say that we will have an additional meeting next week. Again, we will present, additional options or any new information we have, we'll immediately share. We will get this presentation posted on the website tomorrow, and it will be there for everyone to view. If anybody has any questions, they can feel free to email the district and we will respond as we get to them. But otherwise, we will again have another meeting on the 22nd, and we will continue this conversation and hope to come up with a very good plan to get through this this challenge, and then the foresight to how we move forward and not continue to find ourselves in this situation.
I would just like to thank Ms. Denicola again, and let everyone know that whatever this is, however bad it is, we're committed to getting through it, making it better, and caring about the kids as much as we can afford.
And I'll just echo everything that Rita said, agree with it. And again, thank you, Patty, for all your hard work on this, and look forward to continue to make progress.
Thank you, everyone. Would one of the panelists like to make a motion to adjourn the meeting?
I will make that motion.
And I'll second. That's also fine with me.
Okay, thank you, everyone. We'll meet up again, same time next week.
Thank you.